So you've decided you're ready for homeownership and ready to make a commitment. Good for you. Now what's next? Do you remember the old riddle about which came first, the chicken or the egg? Well, the next step in the home buying process is a little like that riddle. Do you find a home and then find the financing? Or do you secure the financing first and then look for a home? I don't know if they ever figured out the chicken riddle, but many home buyers today choose to pre-qualify for a mortgage before they look for a home. With mortgage pre-qualification, house hunters can begin their search knowing how much their lender will lend and how much their loan will cost. To pre-qualify, you'll need to provide your lender with basic financial information. You may also be required to disclose information about your work and credit history or assets. Next, the lender will review your information and provide you with a written statement showing your maximum loan amount and closing cost requirements. But remember, pre-qualification is only a preliminary decision and not a full loan approval. You can go a step further and get conditional approval. Conditional approval requires more upfront documentation. With conditional approval, you can be relatively confident that your loan will be processed quickly and easily. In most cases, your lender will need to request a credit report as part of the pre-qualification or conditional approval process. If your lender makes an inquiry to the credit bureaus, it will affect your credit score. Whether or not you choose to pre-qualify, seek conditional approval for a mortgage, or wait until you've found a home to begin working with a lender, you'll need to understand the different mortgage types. Fixed rate and adjustable rate mortgages are the two most common mortgage types. With a fixed rate mortgage, the interest rate stays the same over the life of the loan. Adjustable rate loans, commonly known as ARM loans, usually offer a lower initial rate of interest than fixed rate loans. However, rates will fluctuate. When interest rates rise, your loan payment will go up. Your loan officer can guide you to the loan type that best fits your situation. Once you're pre-qualified or have conditional approval for the mortgage type you've selected, you're ready to go shopping. Where do you start? Most people start with a professional real estate agent. A real estate agent can be either a buyer's agent or a seller's agent, and in some cases, both. It's important to know the difference. A buyer's agent will be looking out for your best interest. A seller's agent is responsible to the seller. In general, you may be most comfortable with an agent who is focused on your needs as a buyer. Let your agent know what you're looking for in a home. Be specific, set priorities, think it through. How many bedrooms do I need? Do I want a home near public transportation or in a specific school district? Let your agent know the items on your wish list that are most important to you, the must-haves or deal breakers, and those items you may be prepared to bend on. Aside from your wish list, you'll want to consider other factors in your home search. Property taxes. Some areas and counties have a much higher tax on personal and real estate property than others. Condition of the home. Is it an older home, a home with potential maintenance issues? Utilities. Gas, water, sewer and electric, cable, phone. What will utilities cost each month? Consider all the utilities that will be associated with your new home. Flood zone. If you select a property in a flood hazard zone, your lender will require flood insurance in addition to homeowner's insurance. Property value. Is the property located in a neighborhood where homes are holding their value or increasing in value, or is the neighborhood in decline? Will your new property increase or fall in value once you've purchased it? So there's a lot to consider in your home search. We'll talk more in Part 2.